So today we will start profit center accounting. So profit center accounting is part of actually profit center accounting is not part of controlling. It is the part of another module which is called enterprise control. Enterprise control is a separate module. So in the enterprise control, profit center accounting is a sub-module. Here in the enterprise control, we have sub-modules like consolidations, then execute information systems, then profit center accounting. So profit center accounting is part of your enterprise control. But the total information you require for profit center accounting is extracted from controlling area only. That's why at the time of implementation also, when we implement the controlling, profit center accounting is also implemented as a part. So in the training also, we will see the profit center accounting as part of the controlling area. As part of the control. Here, this consolidations is called ECCS. EC means enterprise control. CS means consolidations. Then this execute information system is called, the execute information systems is called, right? ECEIS, executive information systems. EC means enterprise control. Then this profit center accounting is called ECPCA. EC means again enterprise control. PCA means profit center accounting. So here, the main aim of the profit center accounting is to determine the profits for the internal areas of responsibility. That means using this profit center accounting, we can find the profits according to products, product groups, or product lines. Right? Now, by assigning the balance sheet items, that is fixed assets, in your material, D is printed in place of F, right? Strike off D and make it as F. So we can assign the balance sheet items, right? See here, by assigning the balance sheet items like fixed assets, receivables, payables, and stocks. Stocks means inventories to the profit centers. We can analyze the assets of the company according to profit centers. Profit centers can be designed according to product lines, geographical factors, such as regions, offices, production sites, etc. etc. Means, for example, ours is a construction company, right? I'm explaining production site means what? See, ours is a construction company, right? So we are in Hyderabad. So in Kukatpalli, right, we are constructing some 100 apartments. Then at Dilshuk Nagar, we are constructing another 200 apartments. Then in Lingampalli, again we are constructing some 150 apartments. These are called production sites. Now, obviously, the management wants to know what is the profit exclusively from the 100 apartments in Kukatpalli, 200 apartments in what is the second? Dilshuk Nagar, and 150 apartments in Lingampalli. So exclusively, the management wants to know the profit from each of the site, right? In that case, each site or each project can be created as a profit center. And also, we can design the profit centers on the basis of regions, offices. But in most of the cases, right, the profit center accounting is used to find the profits according to products or product lines. So this is also called responsibility accounting. The profit center accounting is also called responsibility accounting. ECPCA. EC means enterprise control. PCA means profit center accounting. Lets you calculate internal operating results for the profit centers. A profit center represents an organizational subunit that operates independently on the market and bears the responsibility for its own costs and revenues, simply saying products. So normally, as I told you, normally the profit centers are used to find the profits according to product lines or products. So each product is independently operating in the market. You organize your organization into profit centers by assigning the master data of each profit center relevant objects. Means, see, a profit center can be assigned in the materials. Means in in the material master records, we can assign the profit centers. Then in the cost center accounting, we can assign the profit center in the cost centers. Then in the internal order accounting, right, we can assign the profit center in the internal order. Then in the project systems, right, we can assign the profit center in the projects, master records. Again, in the sales and distribution, we can assign the profit center in the sales order. Like that, in most of the controlling objects, we can assign the profit center. As a result, the expenses and revenues will be flown to the profit centers from the respective controlling objects. Then, all the business transactions in the R3 system, which are relevant for cost and profits, are updated in the profit centers. At the same time, they are processed in the original module. Say, for example, we are posting expenses in F5, right? Then these expenses are created in the, these expenses accounts are created as a primary cost elements in the cost center account. In the cost element account. Now, at the time of posting to these expenses, compulsory we are entering the cost center, right? Now, if you remember, at the time of creating the cost center master record, right, we were receiving one warning message, like what? Profit center accounting is active, but no profit center assigned, the cost center master record. So why do we assign the profit center, the cost center? For the purpose of identification of expenses. So for example, right, material consumption is there. Raw material consumption. Raw material consumption is a expense GL account in F5. That is created as a cost element in cost account, cost element accounting, right? Now, we are producing and selling product 1. In order to manufacture this product 1, we have 10 processes. Each process is created as a cost center, production cost center, right? So the product 1 is passing through these 10 production cost centers to complete the production. In that case, we assign this profit center product 1 in the master records of all the 10 production cost centers. So every day when the expenses are posted, they are posted to respective production cost centers, right? So at the end of the month, the sum of the expenses posted to all the 10 production cost centers will be the cost, total cost for the product. That is what is written here. So when we post expenses in any module, right, they will be posted to profit centers instantly. This transforms all the flows of goods and services within the company into exchange of goods and services between the profit centers. This profit center structure applies for both actual postings and profit center planned data. That means for each profit center, right, we can also enter the planned values. For example, product 1. For the product 1, right, this month, the targeted profit is 25 crores. Now we'll be going on assigning actual expenses and actual revenues. At the end of the month, what is actual profit? Then the actual profit is compared with the planned profit. If the actual profit is less than the planned profit, then we can analyze the reasons. So in controlling, always we analyze the reasons for the variances. And it is also possible to treat a profit center as an investment center. In addition to flows of goods and services, we can transfer the selected balance sheet line items like fixed assets, payables, and receivables to the profit centers on periodic basis. This makes it possible to calculate such key figures: profit on sales, return on investment, and cash flows. So here, there are different valuation views for the profit centers. See, there are different valuation views for the profit center. Number 1, legal view. Individual enterprise. Means here, if you take the group as a whole, right? So the group may contain number of company codes, right? In that case, right, legal view means every company code can be treated as a profit center. Then all the 3 company codes, for example, can be treated as a group, In that case, we can see the group view. Then profit center view for business transactions between the profit centers. So what is the information the management will get from the profit center accounting? The information the company can get from the profit center accounting is what is the operating profit for a profit center. Contribution of organization units to the total profitability means here you are producing and selling 3 products. So the total profits of the company is 150 crores. Out of this 150 crores, what is the profit contributed by each of the product? That information is ascertained from the profit center accounting. That is called contribution of organization unit. So what is the operating profit for a product? Or profit center. Profit center means basically a product. So in most of the cases, normally the profit center accounting is used to find the profits according to products or product lines. So normally each product is treated as a profit center. Then return on capital means what is the return on the capital invested on each of the product. That means what is the asset value attributed to a profit center. What is the asset value related to a profit center. Then cost management, which responsibility areas exceeded their planned cost for the last month. Means for every product or for every profit center, we can enter the planned values for the expenses and also for the revenues. And these are compared with the actuals. If any actual expenditure is more than the planned expenditure for any profit center, the reasons are analyzed by the management. Then management of internal sales and services. What goods and services are exchanged within the corporation, within the group. So this is the information what we can get from the profit center accounting, what we can provide to the management. Then here we have the different types of currencies in the profit center accounting. Number 1, transaction currency means the currency in which the business transaction is posted. Then company called local currency. Otherwise, the profit center can have a separate currency. So in the profit center accounting, we can have these 3 types of currencies. So amount in transaction currency, it will be coming from posting a document. Amount in company code currency, amount in profit center local currency, right? So we can have these 3 currencies in the profit center accounting. See, amount in profit center local currency means a profit center can have its own currency, but the profit center currency can be the controlling area currency or group currency or any special profit center currency as the reporting currency. See, in the standard reports for the profit center accounting, the values are displayed in the profit center reporting currency. Normally, the controlling area currency will be used as a profit center local currency. Means the reports are presented in the controlling area currency. So what is the profit center? It is an organization unit in accounting that reflects a management-oriented structure of the organization for the purpose of internal control. This is all for the interview purpose, right? For your understanding purpose, profit center is nothing but a product or product lines. Profit center groups are collection of profit centers with similar characteristics. These are similar to cost center groups, internal order groups, profit center groups. For example, according to product group. Say, for example, basic chemicals is a product group. Then pharmaceuticals is a product group. Polyolefins, one product group. Telecommunications, one product group. Power, one product group. Information technology, one product group. Corporate common, one product group. Under each, see, product group is nothing but profit center group. So under each profit center group, we have the individual profit centers. See, basic chemicals, right? Under the basic chemicals, we are producing and selling, right? Polythene. Polythene is a product. It can be treated as a profit center. Then methane. Methane is a gas, right? We are producing and selling methane. In that case, methane is treated as a profit center. So basic chemicals is a profit center group. Individual products are profit centers. Then for each profit center, we can maintain the following master data. Basic data. This I will show you while creating the profit centers. Basic data, validity period, assignment of company codes, address and communication data. In every profit center, we will maintain this data. See here, basic data. In the basic data, analysis period, name, long text, and person responsible and profit center group. Then, if you have the multiple company codes under the group, each company code can be considered as a profit center. Then we assign the profit center to we assign the company codes to the profit centers. So flow of values into profit center accounting. How the values, from where and where the values are flown into profit center accounting. From the profit and loss account. Means FI. From the metals management. Means from the metals management, expenses like raw material consumption, right? Then raw material scrapping. Then purchasing costs. That is purchase order costs, right? They're also called procurement costs. Procurement costs. So procurement costs, input taxes, raw material consumption, raw material scrapping, etc., will be taken from metals management. Then from sales and distribution, right? Sales revenues and sales lead expenses are taken from sales and distribution. Then from the balance sheet items. At the time of period end closing, the balance sheet items are assigned to profit centers. From the asset management, transfer of metal stock. This is from Transfer of work in progress. This is from product costing, right? Then flow from accounts payable and account receivables. Flow from controlling. That is period end closing. Means at the time of assessments and distribution, we can also transfer the costs to profit centers. Flow from overhead cost management, profit center document entry, assessments and distributions. So from all these sources, the information of expenses and revenues are posted to profit center accounting. So this I have given in the form of a presentation. So which data is transferred to profit center accounting? All postings affecting revenues and cost elements. PL postings directly coded to profit center. So sometimes, right, all the expenses may not be created as a cost elements. I told you, we create the expense accounts as a primary cost element, and the primary cost elements are posted to cost centers, and the cost center master record, we assign the profit center. As a result, those expenses will be posted to respective cost centers. But sometimes we don't create all the expenses as a primary cost element. The expenses which are of purely financial in nature, right? We don't create them as a cost elements. For example, bank charges. Can we control the bank charges? No. That's why I don't want to analyze the bank charges in controlling. So we did not create the bank charges as a cost element. Then it will not be posted to any cost center. As a result, it is not posted to any profit center. Right? In that case, these P&L items, see, interest on term loans, right? Then bank charges. Sometimes you have the idle buildings, right? So you have let it out them. You receive some rent revenue that is not related to business. In that case, right, rent revenue also will not be treated as a costly. So like that, some expenses and revenue GL accounts may not be treated as a cost elements. In that case, they can be directly assigned to profit centers. Then P&L accounts maintained with automatic account assignment in PCA customizing. These two steps I will show you while doing the configuration. And of course, this also. Balanced accounts maintained with automatic account assignment. Then P&L accounts related to transactions in the logistics. Here, logistics means MM and SD are called logistics modules, right? So in MM, right, we have the production cost centers, right? So the materials are issued to production from MM. When the material is issued to production from MM to production, right, then when you issue the material, it gives the rise to expenditure material consumption, right? So the material consumption account is available in the FI. So when the MM end user enters the material issue in MM, raw material consumption account is updated in the general ledger. And the raw material consumption is created as a cost element. Then that is posted to cost center. From the cost center, that is posted to profit center. So P&L accounts means all expenses and revenues related to transactions in the logistics. In MM integration, I will show you this clear flow. In MM integration, I will post raw material consumption in MM. Then I will show you the impact in all the 4 modules. MM, one document is posted. FI, one document is posted. Cost center accounting, one document is posted. Profit center accounting, one document is posted. By just entering the expenditure in MM, right? That updates all the relevant modules. So this is the data which is transferred to profit center accounting. So here, these slides I will explain you later, right? You cannot understand at this point of time. Then, so here, for each, remember, for each profit center, we can identify actual expenses, actual revenues, and in some cases, balanced items. So when you're able to identify actual expenses and actual revenues for each profit center, we can find out actual profit. Then for each profit center, we can also plan for expenditure, plan for revenues. Then we can find out the planned profit. The actual profit is compared with the planned profit. Then if any negative variances are there, they're analyzed by the management. So here, after creating the profit centers, our main aim is to identify expenses, revenues, and balanced items with the profit centers. So how the expenses are posted or how the expenses are identified with the profit centers. See, the expenses are identified by assigning the profit center in the master records of other controlling object, like cost centers. So we can assign the profit center in the cost center master record, in the internal order master record, material master record, projects, sales orders, assets, cost objects, and profitability segment. See, the profit center can be assigned in almost all the controlling object master records. See, you can see the arrow directions. From all these objects, right, the expenses and revenues will be posted to profit centers. How? For example, right, a profit center can be assigned in the cost center master record, right? Say, for example, our product 1 profit center is there. So this profit center product 1 is passing through 5 processes. Process 1, process 2, process 3, production processes, process 4, process 5. Process 5, right? So here, process 1 is a production cost center. Process 1 is a production cost center. Process 2 is also a this, let us say, cost center A, right? Then cost center B, or you can say production cost center A, production cost center B, production cost center C, production cost center D, then production cost center E. Okay, so these are the for 5 processes we create 5 production cost centers, right? Then in each cost center, see, this product 1 is passing through all these 5 production cost centers, right? Then in the production cost center A, we assign product 1. Oh, it is taking the principles, it is taking the formulas. Okay, so we assign the product 1 in the cost center A. Then product 1 in the cost center 2. So in every cost center, we assign product 1. So at the time of posting to expenses, right, we assign these cost centers, right? So every cost center is posted with some expenditure every month, right? So at the end of the month, right, the sum of the costs of these individual cost centers will become the total cost of the product 1 profit center. That is the reason why we assign the product 1 in the cost center master record. Sorry, that is the reason why we assign the profit center in the cost center master record. Then why do we assign profit center in the internal order? Say, for example, product 1. So you have participated, product 1 is a new product, for example. So in order to promote this product, right, you have participated in one exhibition exclusively to promote the product 1. In that case, the total cost of exhibition is to be charged to product 1 profit center. For that purpose, in the internal order master record, we can assign the profit centers, not only in the cost center and internal order. In every controlling object master record, we can assign the profit centers. I will show you while creating the material master records, right, and production order master records. I will show you where we can assign the profit centers. That's how the expenses are posted to the profit centers. Then identification of revenues. There are 2 scenarios in identifying the revenues with the profit centers. So do one thing. One sentence is missing here. Right now, identification of revenues. Right after that, please write down. The revenues are identified. The revenues are identified. The revenues are identified with the profit centers. With the profit centers on the basis of business area. On the basis of business area. See, there are 2 scenarios in identifying the revenues with the profit centers. Number 1, when each business area is dealing with all the products. Number 2, when each business area is dealing with exclusively with one product. Let us see both the scenarios. See, when each business area is dealing with all the products, right? Here, we have the Hyderabad business area and Chennai business area. right? Then the Hyderabad business area, and we are having three products, right? So in Hyderabad business area, we are selling product one, product two, product three. Then in Chennai business area also, right, we have product one, product two, and product three, right? In that case, for each product sale, we create a separate GL account. Sale of product one, 3 lakhs, GL account number. Sale of product two, 3 lakh 1. Sale of product three, 3 lakh 2. So in any business area, if you sell the product one, at the time of posting that sales, you enter the GL account number 3 lakhs. Then that is posted to sale of product one. In any business area, you sell the product two, then that is posted to 3 lakh 1 GL account. Means you create 3 sales GL accounts. So with the help of the GL account number, the system will identify the sales with the respect to profit centers. See, in this case, the sales revenue is identified with the help of the sales GL account number. At the time of posting the sales, if the GL account number 3 lakhs is entered, then the revenue is identified with the product one. And if the GL account number 3 lakh 1 is entered, then the revenue is identified with the product two and so on. Clear, no? But in this case, you cannot prepare the balance sheet. In this scenario, we can prepare only the P&L account, but not balance sheet, because it is something difficult to identify some of the balance sheet items with the profit centers. Say, for example, right, in Hyderabad business area, right, one delivery vehicle is there. Right? Its acquisition cost is 11 lakhs 12,475 rupees. It is the acquisition cost, right? Now, in Hyderabad business area, we are selling product one, product two, and product three. And product three. We are selling product one, product two, and product three. Right? In that case, with which product balance sheet you identify this delivery one acquisition cost, because this delivery one acquisition cost is this delivery van is used to deliver all the three products in the Hyderabad business area. In that case, with which product balance sheet you identify this delivery one acquisition cost? Is it possible? Yes or no?
No, sir.
It is possible. I will tell you. Of course, you are right, Umesh. Don't take me wrong. Here, even in this case also, I want to prepare the balance sheet. Yes, that is possible. In this case, if you want to prepare the balance sheet, right, for each product, the acquisition cost of this delivery van has to be allocated to these products on the basis of their turnovers in the Hyderabad business area. Getting my point?
Okay, sir.
Right? That is logical only, right?
Sir, as per their
Yes, sir.
lifespan of the vehicle, sir.
No. I'm not talking about the lifespan. I am talking about the acquisition cost. So
when we purchased, we will divide the sale value of the vehicle among the three products.
how?
Based on the turnover, as you said.
Exactly. Turnover may change every month, na?
No.
Yes, sir.
Right?
Yeah, yes.
Yes.
For example, in the month of January, right? Product one sales. Product one sales. 11 crores, 15 lakhs, 25,375.15. Then product to sales, 15 crores, 75 lakhs, 45,000, 25.75. Product to three sales, 25 crores, 25 crores, 45 lakhs, 25,000, 654 rupees. So if you want to prepare the balance sheet, right, this 11 lakhs 12,475 acquisition cost of the vehicle is to be apportioned among these products, right, in this ratio. Calculate the ratio. So you are very much expert in the maths. So your use of the calculator and you calculate the ratio. In the Hyderabad business area, there are 100 computers, right? There are 100 hard disks. There are 55 laptops. There are 25 tables, 100 chairs, 50 sofas. So how many assets you apportion on this basis? Just impossible, right? That's why
Sir.
in this case, you cannot prepare the balance sheet in order to overcome this problem, right? At the time of posting the document itself, right? If you can split this value, right? That's why we cannot prepare the balance sheet in the previous versions. But in the ECC 6.0 version onwards, right? SAP has introduced a concept which is called document splitting. So using the document splitting functionality, right, the system automatically splits the line items in the document according to predefined criteria. What is the document splitting? Now only you can understand. So in the general ledger accounting itself, if I talk about document splitting, we don't understand anything. That's why in my training, I touch this document splitting only after profit center account. Because you have to understand the problem in the profit center account. So using the document splitting functionality, at the time of posting the invoices, every line item, I mean every business transaction, right? At the time of posting every business transaction, especially assets and liabilities, the system automatically splits them according to predefined value. This is a clearly shown.
Does it take any factor into consideration, sir?
Sorry?
Does it take any factor into consideration?
No,
there are
we have
so
to do some
many-
configuration. We have to do some configuration for the document splitting.
Because as you told, let's say so many computers, so many hard disks, so many laptops, so many vehicles.
Yeah.
Does it all zero into some particular factor
Yeah.
to multiply that factor?
Yes. There is one concept item categories, right? So with the help of the item categories, the system splits the every assets and liability also.
And what happens if there is, let's say there's a loss on the vehicle? Is that also split into all the...
No. The expenditure is posted with respect to cost center. From the cost center, that is posted to profit center.
Okay.
Suppose if you don't create that as a cost element, then we can directly link to profit centers. That I will show you in OKB9, right? We can directly link this type of expenses to the profit centers.
Sir, apportion means that you are deducting the vehicle expenses from the product sale.
Distributing, bifurcating.
Yeah. Bifurcating and then expense out, yeah, from the sales.
Yes.
Splitting the
Yeah,
values.
because we are not capitalizing, if I am wrong, yeah, not capitalizing, we are expensing it out, yeah.
Yes.
And sir, in the given example, Hyderabad branch and in the Chennai branch, this vehicle is used only for the Hyderabad branch, and we are
Yes.
taking the profit center. Profit center for the each product 1, 2, and 3.
Yes.
Where the single account we are maintaining for the product 1, which includes Hyderabad as well as the Chennai.
I am talking about assets and liabilities, madam.
Yes, sir. In the given example, it's like you told it is having one company is having the Hyderabad branch as well as Chennai branch.
Yes.
And product 1 to 3, product 1 to 3.
They are both the three products are sold in Hyderabad branch. Hyderabad business area.
Okay.
In Hyderabad business area, you have a vehicle.
Okay. I thought even Chennai branch products are also sellings are also posted to the same product one.
No, not like that. No, it's a different balance sheet. No?
Yes. Okay. And in the previous, there is a one valuation view you told us, sir.
That we
Valuation
can
view.
understand later. Don't worry.
Okay.
Forget about for the time being. Get confused.
Okay.
Then, when each business area is exclusively dealing with one product. For example, in Hyderabad business area, you are selling product 1. In Chennai business area, we are selling product 2. And in Mumbai business area, we are selling product 3. In that case, only one GL account sales is enough. We create only one GL account sales. Then in this case, we can prepare both the balance sheet and profit loss account, because the balance sheet and the P&L account of Hyderabad's business itself is the balance sheet and P&L account of product 1, right? And the balance sheet of Chennai business area itself will be the balance sheet for product 2. And the balance sheet for Mumbai business area will be the balance sheet for product 3.
Because there's only one product.
Yes. Each business is selling only one product, but normally this will not happen. Theoretically only it's possible.
Yes, sir.
So the sales revenue is identified with the help of business area. That means at the time of entering the sales, if the business area, it's not Washington, right? Make it as Hyderabad. Sorry. If the sales, at the time of entering the sales, if the business area Hyderabad is specified, then the revenue is identified to product 1. And if the business area New York, it's not New York, right? Make it as Chennai. Is specified, the sales revenue is identified with the product number 2 and so on. Now, how the balance sheet items are posted? The balance sheet items are identified with the help of the business areas, which is called derivative rule. So this derivative rule, I will explain you at the time of doing the configuration. Now, this dummy properties and all these things I will explain you later. Let us start the configuration. So set controlling area means we have to set the controlling area from which the information is to be transferred to profit center account. Transaction code OKKS. Controlling area is equal to SSKV. Click on enter. Then maintain controlling area settings. Here, I told you, the total information for the profit center accounting is transferred from controlling area only. For that purpose, you have to maintain some settings in the controlling area. What are those settings? We will see. So maintain controlling area settings, 0 KE5. Standard hierarchy is equal to SSKV underscore HIR. It is the profit center standard hierarchy. Standard hierarchy is equal to SSKV underscore HIR. Elimination of internal business volume, select. I will tell you what is this impact. Elimination of internal business volume. Then profit center local currency type. If you press on F4, right? So we can have a controlling area currency as the profit center currency, or group currency can be taken as a profit center currency. Group currency means client currency, or profit center can have a separate currency. As I said, right? Normally, controlling area currency is taken as a profit center currency. profit center local currency type is equal to 20. Controlling area currency. Select, sorry. You add one more sentence there. Profit center local currency type. After that, you add one more sentence. Profit center local currency INR. Profit center local currency INR. Profit center local currency INR. Select store transaction currency. Select store transaction currency. Means when you post the foreign currency business transaction in any module, right, that will also be posted to profit center accounting, right? In that case, the system will maintain the figures in transaction currency also, in addition to profit center local currency. Click on Save. Now, what is the impact of elimination of internal business volume? See, elimination of internal business volume. Say, for example, we have the, sorry, here, internal business volume. Listen to this point carefully. By selecting this checkbox, the system will not generate the documents for those business transactions which take place among the controlling objects in which the same profit center has been assigned. With this selection, we can optimize the database size. We can optimize the database size. Means what? Right. See, we have the product one, right? We have the product one. Then this product one is passing through Department A and Department B cost centers. Okay. Then in the month of January, right? These are the expenses that have been posted to Department A. And these are the expenses that have been posted to Department B. Okay. So as I told you, this product one is passing through these two departments, right? In that case, the total cost of these two departments, right, will be the total cost of this product. So what is the Department A cost? 35,000, right? And Department B cost 50,000. So the total cost of the product is 85,000. Till now it's clear? Yes,
Yes,
sir.
sir. Yes, sir.
Right?
Yes, sir.
Now, here, see, these are two cost centers. These are the two cost centers, right? Then what happened is, at the end of the month, right, we transferred some cost, 15,000, from Department A to Department B. So after the transfer of cost from Department A to Department B, the total cost of Department A will be 20,000, right? Original cost posted is 35,000 minus 15,000. So 20,000 will be the Department A cost.
Yes.
Then Department B cost.
Yes, sir.
Original cost is 50,000. Transfer from Department A 15,000. So total cost is 65,000, right? Then what is the, even after the transfer of cost from Department A to Department B, what is the total cost of product one? Same 85,000. Is there any change in the product one cost? See, before transfer
No,
is, cost is 85,000, product one cost, right? And even after the transfer is also, cost is 85,000.
The cost of the product will be same.
Yes,
It is
cost
just
of the
an,
product is same.
But
Because
just an
the
extra entry,
departmental
sir.
expenses will be
different,
apportioned.
right?
It's
Even
just-
though the
just an
department
extra
expense
entry,
is
no, sir.
different, the cost of production of product one is same. Why? In both the cost centers, you assign the same profit center, right? That's why for this type of transactions, I don't want the system to post the documents in profit center account. What is the use of it, right? There is no change in the profit center cost. That's why I don't want the system to post the documents in profit center for this type of transactions. Clear? That is the impact of the selecting, right? See, by selecting this checkbox, the system will not generate the documents for those business transactions which take place among the controlling objects in which the same property center has been assigned. With this selection, we can optimize the database sets. Then creation of dummy property center. So what is the dummy property center? See, it is the property center to which all the GL accounts which you do not find any account assignments are automatically transferred. We can analyze these GL accounts as it is in the dummy property center, or we can transfer them to any other required property center. With the help of the dummy property center, right, we can ensure that every GL account is considered for the property center account. So it is mandatory to define the dummy property center for property center accounting. There can be only one dummy property center per controlling area. What does it mean? See, we have the three property centers. Product 1, product 2, product 3, right? Now, in FI, P&L account, total profit 100 crores. Right? Now, here in the property center accounting, the sum of the profits of product 1, product 2, and product 3 should be equal to profit in FI. Obviously, we have the three property centers, product 1, product 2, product 3. So the sum of the profits of these individual three property centers or three products should be equal to the profit in the FI, 100 crores, P&L account, right? Now, here, how the expenses are posted to property centers? By assigning the property center in the cost center master. Then, how the expenses are posted to cost centers? Because every expenditure is treated as a cost element, right? Now, here, this is the flow of expenses. See, expenses are created as cost elements. Right? Then the cost element is posted to cost center, right? Then in the cost center master record, we assign profit center. Okay? Why you are creating expenses as a cost element? Because I want to analyze these expenses in the controlling for reduction of the cost or not, right? Now, there is one expenditure, bank charges. Bank charges account. The bank charges are levied by the bank as per their policies. So we don't have any control on the bank charges. We don't have any control on the bank charges, right? So there is no use of analyzing these bank charges in the controlling. That's why I did not create this bank charges as a cost element. So it is not posted to cost center. So not identified to any property center. So this expenditure, bank charges, is lying alone in FI, right? So it is not posted to any profit center. In that case, right, the sum of the profits of the individual products will be equal to the profit in the financial accounting. No,
Yes, sir.
then your reports are wrong. Everybody is able to get my point?
Yes, sir.
That's why we create one dummy profit center.
Dummy profit.
Then all the expenses GL accounts, revenue GL accounts, and balance sheet GL accounts, which you do not find any account assignment like this, will be transferred to dummy profit center. So we can analyze these expenses and revenues as it is in the dummy profit center. Otherwise, we can transfer them to any required property center in the property center account. So in that case, the sum of the profits in product 1, product 2, product 3, and dummy profit center will be
Dummy
equal
profit
to profit in the P&L account. Clear?
Yes, sir.
So with the help of the
What
dummy,
are the examples of
with the help of the dummy profit center, we can ensure that all the expenses and revenues are considered in the profit center account. That's why the dummy profit center is mandatory.
Sir, all the unaccounted expenses are put into dummy cost center.
Yes.
Sir, what are the example of expenses which we put in a dummy cost center, which don't find the profit?
All the accounts which are not posted to any cost centers, any internal order, any controlling object.
Like sundry expenses,
Yeah,
small expenses,
yes. Everything,
which
every
do not,
expenditure. No, let me tell you. Every expenditure which you do not find any controlling object in controlling will be identified with the dummy profit center. Okay.
So what we will do after the dummy profit center, we need to
We can
later on
transfer from the
Ah.
dummy profit center to required profit center on some basis.
Similarly, like we do with the suspense account. We put the expenses
Yes,
in
you
there
can-
and
you can-
later
you can-
on,
Yes, you can think like that. It's a suspense account.
yes, then allocate it in appropriate accounts later on at the finalization.
Exactly.
All right.
Transaction code KE59. Dummy profit center is equal to, this dummy profit center is also called default profit center. Okay. So SSKV underscore dummy. Click on enter. Sorry, click on basic data. Name is equal to default profit center. Name is equal to default profit center. Description is also default profit center for SSKV. Person responsible A. Profit center group SSKV underscore HIR. Click on save. So remaining things we'll see tomorrow. Tomorrow we have the class, right, at 6:30 a.m. People from UK, please bear with me from today for tomorrow only, right? And I can understand it will be midnight for you, right? So please bear with me for this week. So tomorrow we have the class at 6:30 a.m. Okay, Indian time. Please do attend. 6:30 to 8:30 or 9. In between, we'll take some break, 10 minutes. Okay. Then.